Hello, everyone. It's Ryan Devon with the Devon team here at Keller Williams, and it is time for what you need to know this week in Denver real estate. So this is the update for the most recent data as of the 24th of October here, 2024. So today I'm breaking down some unique trends that are currently impacting the Denver market, especially focused on two main segments. The lower end of the market, which is typically first-time home buyer-friendly properties under $500,000, and the luxury sector between $1 million and $1.5 million. So let's dive into what's happening and the factors that are shaping these price points right now here in the Denver market. So let's go ahead and start with homes under $500,000. So this is a big segment of our market. So starting with homes under $500,000, we're seeing a substantial shift from last year. There's currently 3,496 homes on the market in this category, which is a staggering 81.6% increase compared to the same time last year. So while pending transactions have slightly increased, up 2.8% from last year, with 294 units last week, this sector's inventory growth is driving it's a very different market dynamic. So the predictive months of inventory that we're seeing, which is a measure that indicates how long it would take to sell the current inventory at the current sales price, has jumped to 2.7 months, which is up 76% year over year. This higher inventory level means that sellers face a tougher time, with only a 36% chance of selling within the next 30 days, which is a notable drop of almost 15% from last year. So this increase in inventory also means homes are lingering on the market longer, with a median of 25 days in the MLS, which is up 31% from last year. Showings per listing are down as well, averaging just 1.2 per listing, which is a 37% decrease, though total showings did go up by 13% year over year. Interestingly enough, about 45% of the homes that went under contract last week did have price reductions, which is slightly higher than last year by about 1.5%. These price reductions are averaging about 6.2%, which is consistent from what we saw last year as well. So the market under $500,000 is showing signs of softness, with significantly more inventory, fewer buyers, and a lower chance of selling quickly, unfortunately. Now, homes between the $1 million and $1.5 million range. This is another segment of the market here that I'm going to dive into. So moving into this luxury market segment, homes between $1 million and $1.5 million, the story, it's a little bit different. While inventory in this segment is also up 48.4% year over year, bringing the total to 905 homes, the predictive months of inventory is actually lower at 3.3 months, which is down by about 17%. So this segment appears to be more favorable to sellers right now, with pending transactions up by 80% from last year, with 63 units just going under contract here last week. The odds of selling within the next 30 days have slightly improved as well, up to 33%, which is 1.4% more than this time last year. Showings per listing in this segment came in at 1.1 per week, which is down about 15% year over year, though total showings for the segment are up 26%, reflecting continued buyer interest. So the time it takes to go under contract is also interesting here, with a median of 48 days in the MLS, which is up significantly from the usual 21 to 27 days over the past month. So price reductions are more common in this luxury bracket as well, with 51.6% of all homes that went under contract last week having reduced their price. And the reduction size is also larger at this price point, averaging about 9% off of the list price. Overall, the luxury market from $1 million to $1.5 million is in a better position, with metrics showing a seller's advantage despite the rise in inventory. So let's talk about the property type impacts with these different dynamics that I'm going through right now. What does that mean? Well, the real big question that many people are asking is why the inventory growth is so much more pronounced in this under $500,000 market compared to the higher end market? Well, the significant factor is that the type of properties in each segment. So for homes $500,000 and under, which accounts for about 72% of those, they're attached properties like condos, townhomes. So while detached homes make up only 28%, conversely, in the $1 million to $1.5 million range, detached homes dominate, with 90% being detached, and the attached condos, townhomes, are just 9.4%. So attached properties, condos, townhomes, in the lower end of the market are facing new challenges right now, which is adding pressure to the affordability factor. So property tax assessments, for example, from last year led to noticeable increases in taxes. And this year, many HOAs had to increase their master insurance premiums, which is creating problems for financing eligibility. So these insurance cost increases are being passed on to the homeowners either through higher HOA dues or special assessments. This has made attached properties less attractive right now to potential buyers and more challenging for existing owners, especially in a market already burdened with a higher inventory right now. So again, the detached and attached are making up different segments here. So in conclusion, the Denver real estate market in October is experiencing a sharp divergence, really, with the entry-level market under $500,000 is becoming more buyer-friendly and with higher inventory and softer selling odds, while the luxury market between $1 million and $1.5 really remains a bit more favorable to sellers. So understanding these dynamics and the impact of property types on inventory and affordability is essential when you're making these informed decisions. So whether you're looking to buy or sell in today's market, this is all good information to be aware of. So I know I threw a lot of information at you today, but I think that it's fascinating and it's really important for you to understand what's driving this market and what the market is made up. I mean, the big takeaway right now is that over almost 72% of those homes that are currently sitting on the market for sale right now are attached homes. Again, condos, townhomes. It's fascinating stuff. So if this is interesting to you, or if you have specific questions about your unique real estate situation, or you want to run ideas by me, or hey, maybe I'm thinking about buying or selling within the next year, I would love the opportunity to have a phone call or a sit down, let me buy you a cup of coffee, and let's have a conversation around that so we can apply this data and these metrics to you and to your personal life. Again, my name is Ryan Devon. I'm with the Devon team, and if you know of anyone who could benefit from this information, please feel free to forward this video, or better yet, make an introduction. I look forward to talking with you real soon. Have a wonderful and blessed rest of the week. Take care. Bye-bye.